The yuan right now seems to be a lever that the Beijing authorities are looking at pulling right now as the trade war intensifies. What's the likelihood we're going to see a sizable depreciation of the CNY and CNH against the dollar?
I don't see much of a likelihood in that direction because it's not in China's best interest. So right now, it would be weird if the central bank doesn't respond this way because it has to allow more of volatility within that 7 to 7.3 range to counter the tariff pressure. But a bigger worry for the central bank has been the capital flight. And what if this devaluation expectation is embedded in the financial market? Just imagine that is not a weapon, actually, for China to use. It's more like a financial suicide if China let the market believe it will let yuan slide.
Okay, financial suicide. I mean, you can't put it more strongly there, even though we do have names like Jeffries, for instance, saying there's a 75% chance now of devaluation. So talk us through then the conversations you've been having with people in China over the past couple of days and sort of the sentiment or messages that you're hearing.
Well, a lot of people do worry that at some point maybe the central bank could let yuan slide if the pressure from the U.S. is getting too big. This 50% or even 60% of tariff, if actually become true, that's an essential decoupling of China's supply chain from the rest of the world, and that's detrimental. And in that situation, I still believe the central bank will try its best, and it has the credibility to actually defend the yuan. Just think about that 3 trillion foreign reserve. Technically, China's central bank can fix the yuan at any point it wants. And one more point to that, at this point, the bilateral trade between China and the U.S. is not the most important one for China. The trade relations with its other trading partners is way more important. And there is a lot of hostility towards Chinese export in the past few years. It's about dumping or crowding out the local industries, especially in auto or in the green industry. So for China to improve the bilateral relations with other trading partners, it's a much bigger concern. So maintain a stable yuan or even revalue against dollar at some point is really to China's best interest.
Well, Don, how active must the national team, whether it's Central Huijin Investment, the Sovereign Fund, and others, to prop up not only the markets but to prop up sentiment?
They're quite crucial, and people have been waiting for this. Although Central Huijin's action, as you have seen, didn't yield much of the impact on the stock market. It didn't reverse that downward trend. But the fact that the national team is ready and there will be more to come is a bolster for the market confidence. And to invest in Chinese stock market, the rationale behind it is quite different from investing in other market. Chinese stock market is quite isolated from the rest of the world and highly controlled. And many people see it as a breeder for future good companies. And China is producing some of the world's leading companies now. And for anyone who is having an eye on China, they probably are viewing like automation, AI, whatever transformative technology for the future. So the investors, after this round of panic mode, probably will return to Chinese market. I actually see less of a chance of Chinese stock market slide much this year. It could very much likely to outperform.
Well, that's where I was going to go next, Don. You believe that the markets will outperform despite all this negative sentiment right now. So end of the year, we're talking maybe S&P down and the CSI 300 up. That would be quite a prediction.
Well, it's all in relative terms. So previously, people didn't have this expectation that the dollar might be weak in the midterm, and that yuan might be strong. And also, relatively speaking, Chinese domestic economy is in a more stable mode than the U.S. There is a high chance that the U.S. will enter a recessionary period. But for China, reaching the 5% of GDP growth target is still very much likely for the government and also for the general public to believe. So one thing I want to point out is China as a producer for this world is in a much stronger position at this point because demand can be generated out of thin air, but supply is real. You have to actually invest to be able to produce a lot of the stuff. So although the U.S. is imposing more tariffs on China now, but one way or another, it has to pay for a big portion of that cost. And the fact that Chinese yuan is maintaining a relative strong position against dollar is imposing part of that cost onto the U.S. buyers. So going forward, there will be a bigger pressure on the U.S. than on China.